a really good starting point is the 4% rule, which is the traditional FIRE approach of saying, I've got X expenses. If you spend $100,000 per year, then you divide that number by 4%, and you get to a target for what you need to get your portfolio to. So if it's $100,000, then it's $2.5 million worth of a savings portfolio being drawn down annually at 4%, and inflation adjusted as well. So you don't have to worry about inflation. That 4% rule kind of already takes care of that. And if your expenses are half of that, then you need half of that, right? 1.25 million. If it's double that, then you need double that. You need 5 million if you're spending $200,000 per year. And so, this is very conservative, especially for Bitcoiners. It's built off of historical stock and bond market returns, which on kind of a nominal basis of a 50-50 stock and bond portfolio is going to give you like a 7 to 8% return. If you're just in stocks, it's going to be like a nominal 10% return, or that's what it's been historically going back, decades and decades. Actually, in the recent past, it's been higher than that. It's been more like in the 12 to 14% range on an annual basis. So who knows if that will continue. But that 4% withdrawal relative to a 10% return, if you're 100% in stocks, has plenty of buffer for inflation, volatility, and kind of the unexpected areas of life. If none of those unexpected things happened, if it was a perfectly straight or linear, smooth cadence on all this, then you'd have 6% in growth every single year if you're making 10% and withdrawing 4%. Of course, that's not how things play out, right? So that extra buffer accounts for sequence of withdrawal risk, and the volatility that comes with the markets, and it accounts for the extra expenses that you might have on a year-to-year basis and that kind of thing. If you are saving in Bitcoin, and Bitcoin can be at least double the return rate than the stock market, let's say 20%. Well, then the question is, well, does that mean that you could actually double the withdrawal rate that you might have for Bitcoin? And I think the answer is yes, that a 20% compound annual growth rate for the foreseeable future is conservative, actually. If we think it's at 25%, now all of a sudden an 8% withdrawal rate on the Bitcoin portion of your portfolio is very, very conservative. And most people don't own 100% stocks, and they don't own 100% Bitcoin. There's some blend there. So what you can do is you can apply the 4% rule to the stock portion, and you can apply the 8% rule to the Bitcoin portion and come up with like this blended withdrawal rate. So if you are 50-50 stocks in Bitcoin and you apply 4% to stocks, 8% to Bitcoin, you're going to come out around 6% of a blended withdrawal rate from that portfolio. And now we can take this one step further, actually, and say, well, now you're thinking about those withdrawals at a 6% withdrawal rate. You're thinking about those withdrawals in a proportional perspective. Like if I've got $100,000 a year in expenses, I'm going to draw down, 4%, $50,000 of that coming from the stock side and $50,000 of that coming from the Bitcoin side. But then the question is like, well, why would I sell any of the Bitcoin early on in my retirement? Why don't I sell down my stock portfolio before I even touch the Bitcoin? And if you're doing that, then you're giving the Bitcoin even longer runway to compound for the entirety of it, which actually would, I haven't done the calculation on this, but that would drive that blended withdrawal rate up slightly, because you are able to actually give, maybe it's just a 5-year buffer or something at the beginning of the retirement before you start touching the Bitcoin. Well, an extra 5 years of Bitcoin compounding at 25% all of a sudden balloons the portfolio much greater than it otherwise would be if you're selling it down proportionally. So there's a lot of nuance to that particular question, but I think the simplified version is 4% rule for any of the stocks you own, 8% rule for Bitcoin, come up with a blended number, and that is the target that you need to get to. That's what you need to be focused on. And it's just a guidepost. Doesn't have to be the exact dollar amount, but it should give you a really good thing to point at, to say, okay, I've got enough. Now I can start to pull back. I can start to, I don't need to save anymore. I can start to spend the money if I decided I'm going to keep working. You literally don't have to send any more money to savings. You could spend every last cent of it, buy those things early on before you actually retire. That might be big expenses that you want to buy, a new car or whatever it is. And it's not at all going to affect the long-term nature of your retirement or your financial independence. So this is kind of how I think about this. By the way, I've got a lot of this functionality built into a free tool that I have at calc.firebtc.io. It's called the FireBTC Compass. And you can put in your expenses. You can do that all in one lump sum number of annual expenses, or you can take a granular itemized approach and build up your expenses from all the things that you can that you want to add to it. And then it will do the calculation of your allocation between stocks and Bitcoin, and it will give you a 4% withdrawal rate on the stocks and 8% on the Bitcoin. You can adjust those numbers if you would like to. And then it also has the ability for you to adjust the compound annual growth rate that you would expect for stocks, the inflation number that you would expect for for the economy or your expenses over time. And you can actually even flip it into power law mode. I know there's a lot of power law fans out there. You can flip that into power law mode as well for the CAGR on Bitcoin. So lots of cool functionality there that can help you just get an idea of what these numbers might look like for yourself, and use it to track over time. You can kind of add data points every time you're updating your finances, and watch the historical chart fill out, so you can track this over time. I see you're showing me.
Is that the correct website?
Is it the correct what?
Is that the correct one that I found here?
Yeah, absolutely. That's it. So it starts with no data in there. If you hit that update my finances button, it's going to bring you to this tab. And here's where you can either just input a number in there as like your total number, or if you go to detail mode, you can start to add line items in there. There's actually a line item for a buffer that you were talking about, and you can change what that buffer might be. There's a line item in there for capital gains as well, because if you think about it, when you sell your assets later in life, if you're selling them down, there's some type of capital gains tax associated with that. And so you can just plan for that as being an extra expense that you're going to have to pay on an ongoing basis as well. And so if you input all of those things in there, it'll add it up to that annual expense number.
Interesting. I love it. I've never seen that. So we could start with the 5K that I said before. What is it? I think 60K would edit. Do I have to edit here?
Yeah, so go back. There you go.
Oh.
Just put it in there.
Yeah, 5K a month. With 5K a month, you probably need like 1 million, 1.5 million or something like that.
So this is the amount of Bitcoin that you have, right? So let's say you've got 10 Bitcoin. Great. Stocks and other holdings. And this I think about as liquid holdings, right? Like this is things that you actually can sell to fund your lifestyle. A lot of people own real estate, or they've got equity in their home, right? If you've got $500,000 of equity in your home, that's great. Looks good on paper. You can't actually use that money to pay for your lifestyle. You've either got to borrow against your home in order to access that equity, or you've got to sell it and downsize. So I tend to not count it. And so here you can see just a different breakout of, okay, here's my annual expenses. Here's my target if you're looking at just the traditional 4% rule. Here's my portfolio value relative to that. And then BTC holdings, your adjusted FIRE target. So this is saying, hey, with the amount of Bitcoin that you own, you actually don't have to save as much, right? Because there's a higher compound annual growth rate attributed to Bitcoin. And then these labels over here on this heat map or this thermometer are based on an article that I wrote called the 9 levels of fire.
Interesting. So you even have a time to fire, so like a time, like how long it will take you to get to the traditional fire space. It will be then the full fire, like the 7.
That's right.
Level 7
That's
here.
right. Yep, that's right. So that orange bar that's over there, you've reached that when you think about the Bitcoin adjusted. Some people want to just think about this as okay, I'm going to be even more conservative. I'm not going to assume an 8% withdrawal rate for Bitcoin. I'm just going to assume the standard 4%. That's that traditional number that you'd be thinking about.
Interesting. And then it updates also this thing, and you come then closer to the actual number.
That's right. That's right. And then if you scroll down, now there's only one data point here, so you can't really see how this fills out. But over time, if you come in tomorrow and you update your numbers, or you come in next week or next month and you save that snapshot, this chart will start to fill out, and it will show you like lines of where your portfolio is, where the different targets are, and you can see what those snapshots are. So you can kind of flip between like what the multiple looks like and the percentage that you are to your goal and all this kind of thing. So yeah, it's a useful tool for kind of seeing what you need to achieve and tracking it over time.
I love it. Thank you so much for sharing this.
Here's one other thing that's really interesting. Go to the projections tab there. By the way, I've not been able to spend as much time on this as I would like to build out a lot of the features. I probably should spend more time on it than I have. But it will over time get a lot more robust. So this is what I call the bear market stress test. And what it does is it takes all of your information and it stress tests it against 2 historical bear market cycles to say that the question that we're trying to answer here is, if you retired tomorrow when Bitcoin is at $75,000 and at that point in time was the start of another bear market drawdown that matched what was in those previous 2 cycles, would your portfolio survive over a 30-year time horizon? And if you go in and you change your finances, you'll see you bring them much lower, right? Like you don't have enough saved, this thing will drop to 0. Like make your Bitcoin holdings 1 or something. Just yeah, that might work. Yeah, that's probably enough. Yeah. Like you've got $275,000 saved. Okay, go to projections. So if you retire tomorrow, your portfolio will be depleted 6 years later. The only way to not have it depleted is that max safe withdrawal of 2,800, but your expenses are much higher than that, right? That you put in.
I think the expenses are like 5K a month that I put in there.
Your expenses are 5K a month. So in order to not deplete the portfolio, you would need to spend $2,800 or less. By the way, I know you're in Europe and you probably use euros. If you go to settings, go to preferences, you can change the currency there as well. You can display everything in sats if you'd like, and then you can back it up as well. So this is an important distinction here with the way a lot of these tooling works, is that all of the calculation, all of the data storage is all happening in the browser. Nothing goes to some server somewhere. It's all happening in that browser, which is great from a privacy perspective, but it also does create the potential for you to lose that data if something happens to that browser cache. And so that's why I have this like export import functionality, so that it will take all of that snapshot history and allow you to back it up every once in a while, just in case something were to happen there. You can always just import it back into the browser.
Yeah, if you, I don't know, delete the cookies of the browser, you probably lose all the
You
data.
lose all of that. That's right. That's right. And then if you go to the Assumptions tab, Settings, Assumptions. So here is where you can play with the compound annual growth rates. You can change it into power law mode. You can change the stock growth rate, inflation rate, and you can play with your withdrawal rates as well.
I love that. That's such a cool tool, because this is really it shows you, like it lets you put all your individual things in there without being like, oh shit, like where's my data going? And you can adjust all the individual assumptions, because some might say, I think Bitcoin is growing only with 20%. I think Bitcoin is growing with 35%. I mean, with retiring, I would always encourage people to be extra conservative than to like, it's better for you to have way more money than you thought you would have than way less money than you thought you would have, and run out of your savings. I guess that's a better way to do it. But yeah, that's I couldn't even think about a single thing that's kind of missing here.
Oh, there's a lot that's missing. There's a lot that I have in the backlog to add. I think a lot of people want to see kind of more of like a total balance sheet perspective here. Because I was saying, stocks and other liquid assets are things that you can actually sell down to fund your lifestyle. But people do want to see like more of a total picture of their net worth and include their home equity and that kind of thing, which is like, it's like wealth that they could tap if they wanted to go through some extra steps to do so. That does add an expense if you're going to do that. So maybe we could model out what that would look like, right? If you've got $500,000 in equity or $200,000 in equity and you borrow against that, well, what is that going to do to your expenses? We can make a few assumptions, and then, you're going to invest that money. So then that adds to the asset side and the compounding that you've got. What does your picture look like? So this is something that might fit on that projections tab. There's a lot around income as well. Like, this is assuming that you've got a portfolio of stocks and Bitcoin that you're selling down over time. And that's the 100% sole way that you have any income coming in. Well, that's not necessarily the way that life works. In the US, we have Social Security. A lot of other countries have pensions. They may be small or fairly immaterial amounts, but it's something that's adding to your income. And if you incorporate that income into the total picture here, you're actually lowering the target portfolio amount that you need to save, because you no longer have to sell as much down in order to cover those expenses. Same thing for like a lot of people own real estate and they've got a real estate portfolio and they don't want to sell it for Bitcoin or stocks. They're fine with the illiquidity and all that. And they've got this income coming in. So there's a whole lot that could be built into this that I will get to over time. If anybody's listening and watching and is experimenting with the tool, please feel free to, there's a spot down at the bottom of that page that says, reach out for any feedback that you've got. Please send me what you got. I'm happy to put it into the backlog and get to it when I can.
Really cool. It's also answered my question of like bear market start versus bull market start, because here you can go ahead and see what would a bear market starting right now do to my holdings, and would it fit that? Which I think, especially in Bitcoin, we kind of have to do that probably for the next 10 years still, 5 years still. Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.